Good afternoon, ladies and gentlemen. It's 4:43 p.m. Eastern Standard Time. A little bit stormy out there, which I love. And it's October 2nd, 2015. This is Clueless 8 Frank. This is a free webinar for the benefit of members and free trial subscribers. This session is being recorded. It will be put up on the Clueless 8 YouTube channel for others to see. Full disclosure, this is purely for financial education and not for any solicitation or advice. Straightforward. Okay, so let me cover a couple of things, and I started doing that in the last couple of minutes as to what exactly happened today. This was shock and awe, just on the opposite side of what happened here. This is a daily chart of the E-minis. Same thing as the SPY. Want the SPY? I'll put the SPY up there. The SPX, which is that's the general. That's the easiest one because that's what a lot of traders and people follow. So when this shock and awe happened, and it started off on August 18th, and it was just nonstop, and culminated into the 1,100 point drop on the Dow, the flash crash. The last one was in May of 2010, a few months before I left Wall Street. This particular rampage on the downside was propagated by various factors. I've covered them pretty extensively in my videocast and in my missives and in my tweets and and my commentary, quick commentaries on the real-time Twitter feed. Okay. There was a massive global institutional margin sell-off that was propagated by a crash in oil that caused ripple effect in the credit high yield bond market, which you guys might not really care about, but anyone who has subprime credit, and my credit's a bit dinged, by the way, okay, but subprime credit knows very well that the junk bond markets for corporations is where they go out there and borrow money. Well, given with the fact that rates are being suppressed, it's very easy to have a lot of money borrowed. And a lot of the companies which did that are not the tech companies. Believe it or not, they're not even the biotech companies, but they are primarily the shale, oil, gas, energy and gas companies, especially the smaller ones. So you had a massive fallout, which caused a ripple effect in a significant amount of hedge funds, which leverage their portfolios almost 1 to 10. That means for every $100, they're borrowing $1,000, borrowing another $900. Okay, for every $1 million, they're playing with 10 million. So what happens when you get a margin call? Sure, some of you have gone through that. You don't come up with the money, they'll sell your assets to come up with the money, whatever you have in your portfolio. So that's the simplest reason why these things happen. More sellers than buyers, forced selling. Culminated into a huge drop that day here. A couple of the sovereign wealth funds, and now the news is coming out, and I've been talking about this for the last 3 months. The last one that I tweeted out on the Twitter feed was the Saudi Arabian sovereign wealth fund withdrew almost 70 billion. That means it's 100 billion probably of money, assets from their overseas asset managers, which primarily are in the US and Europe. Because whatever you say, the Saudis don't really give the Chinese to manage their money, or Chinese asset managers to manage their money. Whatever the case, they withdrew 100 billion. So this drop that you saw on Monday, this one, okay, which almost was close to this one, okay, and we still made money that day. This was part because there was a huge mining fallout. Glencore, which is the king of the mining industry, Australian company, lost 30% of its value in one day. Great. So that propagated with the Saudis, doing some real hardcore withdrawals. Asset managers have to sell. So what happens? This was a day that Amazon was down like $30 for no reason. I mean, it's just like nuts. So you sell everything in sight because you got to come up with the money for redemptions by your clients, and of course pure panic in the US market. So everybody sells, it's over. You hear every single bear cacophony of voices, dogmatic bear cacophony of voices, that we're going into a recession, we are doing this, we're doing that. Carl Icahn is talking his own book because he's short the market and he's buying cheap energy companies. Great, fantastic. He's the ultimate trader, and he's got billions, so he gets huge airtime on CNBC, which is fantastic. So all kinds of stuff that happens. And then comes this. So let me get straight to what happened today. What happened today is we've got a bad jobs number. That's a bad jobs number based on a consensus reading of what the jobs number should be. You know what? If you sat down and just penned down the number of job cuts that have been coming out of the oil and gas industry specifically, okay, and some export-oriented industries in the US, just over the last 2 months or so, you could have figured out the job number wasn't going to be 200,000 plus. So you sometimes wonder, like, what the heck do they come with? So you got a bad jobs numbers, 142,000, and a revision downwards on some previous months. So you got a complete collapse. Now, from a technical standpoint, that's a collapse. So let me show you a quick picture of the morning. So this was your morning. So when you get a technical collapse like that, and if you look at my initial charts, it certainly shows that we were going to come down and at least test the lows. We were at 1896 on the S&P, 1893. Dropping another 30 S&P points and testing the lows of August 24th would have been fantastic, right? That's a technical move, so that's what was going to happen. Those 30 S&P points is roughly another 240 points from the 200 some point open, down open, but didn't do that. Once I started to see tactical reversals across the board, and which brings me, and I'm going to stop myself here for a minute. Okay, if all of you are not glancing at the forget the trade alerts, the charts that I put out on the Twitter real-time feed, not only do I spend enough time and energy of my own personal trading to do that in the middle of the violence in the market, upside or downside, okay, for a meager 60, 80 bucks a month. And I will say that, okay, the amount of work that I'm doing for all of you to understand, to learn, to profit from volatility, not to be scared that the world is ending, in the next 5 minutes, is precious. I should be charging $300 a month, because a couple of members, a few, who have been taking the group sessions with me, single sessions with me and stuff, one of them, and he said it publicly so I can say it, had his first $10,000 day. You know how good he feels? Do you know what he's going to do next week? He's going to make another 10,000 plus. And given the way he's going, and he's not some aggressive billionaire trader, he did that 10,000 on a small amount of money. Trust me when I tell you. I don't even know that, but I know. And he's a fine individual, a family-oriented person, a God-fearing person. So the point is that he made this, you know how great he feels? His first 5 figures that he's never made in his life in one day. So what did I answer back to him? Not only was I happy for him, I said, you know what? Now shoot for that 100,000 a day. It does happen. There are inflection points in the market like today where you could do that. And you don't need to have 500,000, a million in the market for trading. You can do it with 20 grand. You can do it with 10 grand sometimes. But you have to be tactical. But most importantly, your mental state of mind has to be solid. You have to know the mechanics of what's being shown. You have to know the mechanics of why I constantly showed so many important inflection points, including one of the most important charts, which if I ask some of you will know, and most of you won't, was the SPY chart that I showed where I said that this is the inflection point way early in the day. Because I saw the trend line being retested and they wouldn't take it down. It was the bar chart, algo HFT charts that I keep on talking about. And I'm finding it on my screen on the other side, so all of you can remind yourself what you might not be looking at or not understanding. If you're not understanding, then you need to sign up for the group coaching sessions, period. The group coaching sessions go on for more than an hour and a half, 2 hours. They're not my bread and butter. I'm not a frigging middle school teacher. And the amount of money that I'm charging to do that stuff is less than, again, I repeat, less than you pay your dog walker or your guy who moves your luggage at the airport. So why am I insulting myself? I'm not, because I have a twofold purpose in those lessons. One, it makes my life easier because my members can understand things better, so I have to type less and write less. And second, it becomes a fluid movement in the middle of the market. I'm going to bring this out right now so all of you guys can see. So it makes life easier for me, and it makes a heck of a lot of money for you. So whoever is sitting there saying, "Oh, I don't want to do the group coaching session because it's like this and that," well, all you're doing is shooting yourself in the foot. Look at this particular thing. What time was it made? What time was it posted? I'm sorry. 10:14 a.m. Can you get any better than this? Go find a service that's better than this. I mean, seriously. On days like today, a white arrow showing, okay, testing of the line, the Periscope broadcast, which explained this chart, an arrow up. Did I know we're going to go back and test this and move higher? No. I did know we were deeply oversold and that this line was not being broken, because if we broke below this gap fill, we would test the lows of August 24th. So all possibilities were on the ground. So how many acted on this and said, you know what, I'm just going to put a little bit in there. I'll buy some SPY calls at 60 cents. They went to $4. That's 500%. You think you can't do that? One call costs $60. So that brings me to my next point here. And I'll get into the technicals, because remember one thing here, guys, and this is really, really important if you're going to stick with me. All right? It's the fact that I can show you the most unbelievable charts, which I do. I sound like Trump here. Wow. And I show you, I guide you guys, I do these webinars, I do the group coaching sessions, and I just pummel people with helpful suggestions and like, okay, this is the way you're looking at it. It can be any simpler than that. The Periscope broadcasts, which are phenomenal, thanks to Twitter. Okay? But I can get into your head and make you do what you need to do. And therein lies the irony and the dilemma. You guys have to fight it, because the markets are manic depressive. That's why you get V-shaped drop downs and V-shaped reversals, because it's either pure panic, which is translated into global massive selling. It doesn't matter if you're a billionaire hedge fund guy, you're doing the same stupid things. And of course, they're forced to, because they have so much leverage margin. So they got to sell hard. And then the rest of these idiots who come on, both on the bullish and the bearish side, who just keep on mouthing off stupidity. Market's going to make new highs from here, blah, blah, blah. Who cares? We're looking for, some technical levels, which people who follow me know very well. 1970, possibly 1980. We're at 1951. We're probably going to open up at 1965 S&P, 10 S&P points higher. Or maybe we're going to open 10 S&P points lower. I don't know, on Monday. But given the ferocity of the move, the chances are that the bias is that it's going to open up higher. So who cares if we go back to 2100 and change? So coming back to it from a behavioral game theory standpoint is all of you really need to think hard. What are you doing? And believe me, I'm not perfect because I'm selling off a little bit earlier too at times. I didn't hold those S&P calls that went from 3 to 24 all the way up, but I did get out around the double, and then I got back in again fast and made another double, but I'm not all the way to 24. And these are the ones expiring today. But my point is, the worst offenses to your own personal dignity is if you didn't do anything and waiting for some nirvana. And what is, you know what nirvana is? Not some group where the guy blew his brains out, okay? And not some Indian term of peace and tranquility. Nirvana is this, where you just capitalize and then you get this. That is happiness. It doesn't mean that you have to be from here to there, but what about catching the good portion of the middle? That, my friends, ladies and gentlemen, is harmony and bliss. That's what. The second thing is and the reason you're listening to this stuff is actually a testimony that you guys are definitely trying to change your mindset. It took me years to change my mindset. It didn't take me that long. Many of you are probably take you longer because you know your maybe your personalities are different. So the other thing is, this is what the average retail trader or investor does. Well, retail investor does it all the time, right? So what do you call they say, oh my God, the market's high. You know, I can't buy this. I'll wait for a pullback. Okay. They say the same thing when it's going down. If they're short that, okay, I'll wait for it to, you know, fall further. The only way you can manage that type of volatility and mental volatility is you gotta be very keen on learning and understanding the way a lot of the stuff that I teach on the technical side, because there is a method to the madness, and the method is the technical analysis of the way I do these things. I'm not saying I'm the one, you know, I'm the only one. There are guys out there, you know, who do it probably better. But the thing is that the behavioral part of it mixed in with the technicals is how you're going to manage whether or not a market is very high, whether it's not, because a lot of this fact of what happened today, which I'll get into in a second, has to do with the fact, these are the channels, by the way. Okay, upper end of the channel, middle channel is 1982, upper end is 2030. Wow, doesn't it seem amazing? Can we get to 2030? I have no idea. Let's first, we cross this line. This is big because this was the breakdown line from 925. That's a big cup breakout. It's going to be a little consolidation, and then we'll go. So the point is that I can't teach you the mental stuff. You got to figure it out yourself. All right. So the reason I'm staying away from really getting into the technical nitty-gritty right now, and I'll get into it a little bit, is because it doesn't serve any purpose. I have already expended enough time and energy to show some very tactical charts, very tactical Periscope broadcasts, very tactical, very tactical videocast, very tactical group coaching sessions for the ones who participate in it. But have you ever asked yourself how much of that teachings and knowledge you've applied? Whether you like the market or not, whether you're scared stiff or not, if you can answer that question in an honest way to yourself, then you know that you're going somewhere. So just throwing away, it's like giving a guy from, and again, I don't want to be demeaning to anyone, but let's say a guy living in the slums in Brazil, and you throw him a Lamborghini, and you say he's never seen a Lamborghini, he doesn't driven a car, and you say, you know what, that's it, go for it, man. What's the first thing he's going to do? He's going to crash that $250,000, $400,000 Aventador or, you know, Gallardo directly into the next telephone pole, right? or drive it into off Ipanema Beach into the water. So that's what's going on here. Is some of you are not really spending the energy that you need, the time and a little bit of dollars to really understand what the heck is going on. And then you come out there and you think you can navigate this market. Trust me when I tell you, because I don't bullshit. Excuse my French. Trading is the hardest business you'll do, and it's the most profitable business you'll ever do in your life. I do it as a business. I got to feed my family, my cats, my dogs, you name it. So that's what I'm getting at, okay? So think about it for yourself. If you honestly want to do this right and stop being frigging scared every single time. I've been scared when I've been short. And then things have opened up 200 points. Trade management, keeping limited, having limited positions, smaller positions overnight and stuff like that. Understanding the macro environment, that's my job to tell people what to do. Because I am a passionate student, and many of you know that, of global politics, economics, US politics, you name it. I'll go head to head with anybody out there on a solid argument. I'm a pure capitalist, I'm a Republican, and I believe that everything is on self-reliance, independence. The Declaration of Independence is on my desk. So you want to declare yourself mentally independent of all the garbage in the market, then work harder. So let's get straight into the technicals right now. I hope some of that made some sense to you guys. All right. So here's S&P. This is a very broad chart. This is an hourly chart, believe it or not. Forget the internals right now. We are certainly getting overbought, and we will stay overbought a little bit, because the point is, and these I'll teach in the group coaching sessions. I'm not going to get into it right now. The structure of this stochastic is telling me that it's going to probably go sideways, and quick little sell-offs are going to be bought. You want to know exactly what date and time that the market is going to start to correct? Well, come into the coaching sessions and I'll tell you. Listen to some of my end of the day broadcast, videocast that I do, and I mentioned some of that in there too. My gut, just a quick thing here. My gut tells me that it's probably going to be after the first week of, which I've mentioned in last night's videocast, after the first week of October, possibly going into towards the second part. We will get some major turbulence in the market, possibly on the downside, because by that time the market will most probably be up another 600 points. You know where that brings us? Can somebody answer me the question? Another 600 points in the market. And I've been talking about this for a while. Okay? I need somebody to pipe in with their voice and say, hey, you know what? Because by that time, people are going to start feeling a little bit good. And that's why I'm saying there's still room to move. So where could be the Dow Jones be if we get to these levels of mini euphoria and 600 points and stuff? I mean, it's such a simple question. I mean, please, I don't even understand why I'm asking that, but seriously. So somebody please tell me. Okay, fish eyes. Congratulations, buddy. Fantastic stuff today. Dow 17,000. First guy who answers. What are you guys all doing? Sleeping? Seriously. Dow 17,000. It's a psychological magnet. The media can play on it. Oh my God, we went to 16,000, now we're 17,000. I've said it a million times. We're trading in bands of 1,000 points. 16,000, 17,000. We went to 16,000 almost. We broke below 16,000, right? So, and then 17 to 18,000. So let me make this real kindergarten style here, okay? We were 18,351. We crashed below here. And I don't want to pamper like, the best student in the class, but can somebody tell me what this pattern is? And by the way, what student? I wrote it down a bunch of times in my charts. I need somebody to come and tell me on the microphone. Do not type it in. What is this pattern called? Can somebody tell me?
Dragon
Yeah, who's that?
Mix.
Okay. So this is a dragon bullish for now, right? Exactly. Is there a possibility that we have a cancellation of the pattern? and we fall down here, 15,370? Absolutely. But that has to happen if we break 16,000 in rapid fashion, which I honestly thought we were going to do this morning. I thought my UVXYs were not going to give me just about 2 points. I thought they were going to give me 10 points. Therein lies the market, guys, ladies and gentlemen. This was today. And if you didn't, you knew nothing about what happened today, and you looked at this chart and you looked at this huge monster hammer reversal, this is a true hammer reversal, reversal hammer. It looks like a hammer that people who didn't make money today should hit themselves with in their head. I'm serious. Okay? This reversal hammer. If you looked at it, would you even know that we had a 200-point drop? No. But you would if you looked at the candle and said, okay, we're at 16,008 and wow, look at this. We turned right. And then now the headlines are all going over, and I just put it up on the Twitter feed. Biggest reversal in 4 years. Largest reversal. Wow. So whatever the guy's name is, not Santelli, the other guy, Bob something, on CNBC, talks off from the floor, and all these guys can talk about something and get their paychecks. Good for them. So this is a dragon bullish reversal for now. People have taken my classes, they're looking at this and they're saying, man, this is easy stuff. And it is. And I know VIX knows that. So they're going to say, okay, that dragon bullish, looks like 17,000 right there. Right there. It's a W pattern. Simple. Double bottom here. This bottom hasn't come yet. Maybe it comes in October when the next set of job numbers show maybe 50,000 job growth, maybe. At that point, believe me, the market's going to fall 600 points in one day. So you're hearing it beforehand. So this is not completely out of the picture. In fact, I would have loved to have seen the market down here today to have a definitive bottom in the market for the year. We do not have a definitive bottom in the market for the year, just so you guys all know. Because if this pattern is going to duplicate itself, this was the move, then this move, let me just show you. This is where the pattern starts, okay? It's not rocket science. This move has not been replicated yet. Okay? These are double bottoms right there. Great. So we're moving up. So now we get up here. Pattern symmetry. Pattern symmetry. It's not rocket science. Please, you guys are smart people. I know a lot of you personally. You guys are smart people. So why is this so difficult? This pattern is still question mark. Not there. Is it possible we drop from 17,000 down to lose 1,500 points sometime in October? Or maybe in November, December, when the debt ceiling thing comes up? Which it was a very good question. One of my members asked me, a returning member, and I said it's off the table for now. It's off the table for now, but it will rear its ugly head. Is this off the table? No. Now, why is this important to all of you? Why are these big picture things important to all of you? It's important because it helps you manage your frigging trades. Right now, hammer reversal, looking at the upper Bollinger at 17,741. Simple math. That's another 300 points from here. Once it hits here, it engages the 50-day moving average right there at 16,806. What did we do today exactly when it comes to moving averages? I know who's going to answer, but please, somebody new answer, please. Somebody new answer. What did we do? What is this yellow line? Okay. I actually won't have people answer that because I know the lines don't always look the same. You have, wow, this is the weekly chart. So this line is your 34-day moving average, okay? Because sometimes it mixes in with the 5-day moving average, which is the trader's line, to be honest with you. So so what we did today was we broke out over this orange type line on the hourly, and that's over the 34-day moving average. So let's go back to the daily here. Look at that. I know it doesn't excite some of you guys, but then that's idiotic. If you want to be a trader or even an investor, then you got to know these things. We broke above. We broke above. This is the 34-day moving average, by the way. This is the 5-day moving average that's curling up. And teaching the technicalities and the nuances of moving averages and how the support prices as they're moving up. Why did they support prices as they're moving up? Because they're moving averages of prices. Math 101. So the point is that it broke up about that. And that's powerful. This is one heck of a powerful reversal hammer. I mean, really, really powerful. On top of that, if you look at the daily, we are getting overbought. We get overbought somewhere around 9,900. Okay, right now we closed around 83 on the metrics here, on the stochastics. So, you know what that means when it gets up here? That's when everyone's going to start to feel good. Like, oh yeah, this market is going to go higher. Bang! They're going to hit it. And that hit is probably going to be at the retest of the upper Bollinger and the moving average where they kiss it, which is 16,800, 50-day moving average. So you got another 430 points to go. I'm sorry, 330 points to go. That is what I mean by good news. Now, all hell can be different starting Monday, that this was just a mirage and it really didn't happen. It's terrible. And we reversed down and we closed below the 5-day moving average right here, this line, right there. That's 16,211. I can assure you we're going to test the lows from today, which is 15,985. And I'm prepared for it. We'll do what we need to do. So that's really what I'm getting at, guys. Okay, I don't want to get into any more technicals. You guys want to learn the mechanics of how these things are happening, why this price line chart looks absolutely phenomenal, which I want to cover quickly actually. This China macro move that we saw today in their stocks and stuff is not a fluke. This is a real deal. Chinese markets are closed for a week in commemoration of their, what is it, the birth of the Chinese Republic or something, okay? And so the point is that when I look at something like this on the daily, where a one single hammer, it's been moving from here. And I've been showing like, buy price line here and there. I haven't been actively trading price line that much, but I still have some long positions. So the point is that it crosses over the 50 and the 34-day moving average at 1262 and closes at 12, what did it close at? 1 second. Shows here close at 1265, but my thing shows, yeah, 1265. Okay, this is good. This is real good because the breakdown on price line was this fake false reversal here was 1298. Call it 1300. So how much of a rocket scientist do you need to be like saying it's going to 1300? Price line moves in sections of 15, 20, 25, 30 bucks, 40 bucks, right? And then you have the ultimate move here, which would be short term is 1340. This is a dragon bullish in its purest form. In its purest form. VIX knows that. All right, so the first engagement is going to be the downtrend line, and if we break up out over that, even if it pulls back after the downtrend line, a 10-point drop, whatever, and then a move up, this will be done. How it's going to be done, don't ask me, ask Shatner. If we fail, we're going to come down here, test this level again, 1200, and it's possible it does this. Patterns play out themselves. We have to know it. So that's one chart, for example. Win. I mean, what can I say? I mean, guys, do you need any real hand-holding for me to tell you that you should buy this stock? Forget about anything. Look, I don't gamble. I don't go to Vegas. I do go to Vegas with my family and stuff. I went to Vegas. My brother-in-law is a big financial guy, and he's also a great poker player. Real smart guy. He goes to Vegas. He's got condos in Vegas. I don't do Vegas. I don't take my weekly trips to Vegas. I don't go sit on the tables and sit with lots of high rollers from China and Dubai and stuff and play. This is my gambling casino. It's called the stock market because I know what I'm doing. So the thing is, when you look at a chart like this, it doesn't take a rocket science to figure out what's going on. The first thing is your test of the broken channel, where it was, to be honest with you, on 1 second here, right there, on the 24th, good old August 24th, right? So a test of that is $74. You want to make another $10 on this? Calls were up 1,300% from yesterday, and from this morning they were up 400%. And I'm talking about the 1160s. I'm sorry, the 60s. The 57s that I put out there, I don't even want to tell you where it went. And you can scalp along the way. It's not rocket science, because I bought the 57s originally, right? I'll tell you where the 57s went. And I'm going to pause for a minute and just ask people if some of the stuff that I'm talking about is worth your time listening to it, because all of you are still there. So the 57s, I just looked it up on the TOS up there, went to $7. More than that. $7. I pushed them out the gate at 2. These are the lottos expiring today, by the way. Forget about the ones for next week. If you had bought the 60s, they went, wow. I don't believe this. They went from 20 cents to $4.25. Guys, this is not magic. This is not magic, okay? This is a powerful move. Stock just got back 22% of its value. It should never have been down here anyway. Steve Wynn is not an idiot. Part of it was propagated, and the catalyst was that China was going to help the gambling the casinos, move up. You think Steve Wynn became a multi-billionaire and buys $50 million paintings because he's an idiot, like all of us? So have some faith in U.S. companies, for God's sakes. Yes, Vegas revenues are down, Macau revenues are down, but the Chinese high rollers, believe it or not, they will gamble the kingdom come. They are the biggest high rollers, the real guys, the ballers, as they call it, right? So the point is that here you have Win right off the bottom. Do you really need me to tell you that this stock is going to at least get up here to 78? How much money can you make? End of story. It's just so obvious. Technically, it's telling me a story. A 50% retracement of Rin all the way from when it started dropping back in March of 2014 would bring us up to a 50% Fibonacci retracement, okay, which I've talked about extensively, which I've taught in the group coaching sessions, is $150. How would you like to do a trade for the next 6 months where a stock goes from 49.50 or even 63 right now because it's so low here, okay, to 100, to the first Fibonacci level of 97, the next Fibonacci level of 150, with patience, with discipline, maybe buy some far out calls, put some stock away. This is not a small biotech stock that's just all of a sudden going to just pop up and just die. This is a real operation, guys. So you're not like playing around. Oh, I'm going to buy a $2 bio stock so that's going to go to $8. Yeah, it happens a lot, but then what happens after that? They fizzle out and they get to 50 cents. This is the real deal. This is a world-class company. I made more money on Win many years ago than I wouldn't want to even talk about. And when I saw it today, it brought back some damn good memories. And I said, you know what? This is great. A candle like this, from a technical standpoint, normally has a 3-day follow through. Doesn't mean it's not going to be down $2 at the open on Monday. What I'm saying is it will get to 73. So that's all I got to say. Okay, I'm not showing you all the charts and everything. Baba is another great one. I put it up here. I showed this, it almost got there. I sold a bunch of it, and it's still going to go higher. Because when you look at the daily of Baba, I don't particularly care about Jack Ma or anyone, okay? Look at this. Engagement with the 34 is at 65. Engagement and testing the 50-day moving average. Standard procedure, ladies and gentlemen. Okay, standard procedure is 69.70. You do a Fibonacci, 1 second, retracement all the way from Baba, all the way up here. Whoa, 50% retracements, almost mandatory. Over a few months, by the way. Not over a few weeks. It's $88. In this particular case, probably going to be a few weeks, 2 months. $88. And they're going to say, oh man, I never really caught it. And you know what I'm going to say? We caught it right at the bottom because we were buying the stock around here last couple of days. They went down a little bit. So what? That's what I'm saying, guys. Don't wait for the perfect moment, my famous last words, because there are no perfect moments because you're not perfect. All right? So don't wait around, oh, yeah, I'm going to buy the market, when it's down like 10,000 points. Yes, we can all be tactically cognizant of prices and stuff like that. But please, let's not try to be some sort of like wise guy, because there's an old the stock market almanac, and there's guys in StockTwits put that up, which um, that there's only 4 or 5 major inflection days in the market which determine the fate of the market. You've heard that, right? Yes, this could be the inflection day in the market for the rest of the year. After, but I'm just saying that it's possible that we test those lows again, as I showed you in the other chart. So my point is that if you're sitting around with a whole bunch of cash and not having any positions in the market's not going to raise a red flag. I mean, a green flag and say buy me, and neither will it raise a red flag, which it already has. Okay, everybody's shit scared. Excuse my French again. Okay, everybody's so scared. It's not even funny. There's about $5 trillion worth. The market lost about what was it? 11 trillion in the past couple of weeks. You know what these numbers are? Can somebody tell me how many zeros are in trillion, please? Quick. You're traders, man. We're numbers guys. I need somebody to step up and tell me how many zeros are in trillion before they're Googling it.
12.
Yes. You know why? Because when you get to your first million, it's not. It's the billion is 9. The first million is 6 zeros. I'm shocked that nobody else stepped up. I'll tell you guys seriously. If this was a Tony Robbins show, you'd be thrown out of the audience. No, I'm just kidding. But for $60 a month and $80 a month, I can't do that. Okay. Yes. 12 zeros. Who said that?
KJS.
Obviously, Mr. Shah, who's going to be the next CEO of some great Silicon Valley company, maybe in the next couple of years, okay? Because he is the CEO of his own family, so that's great. We're all CEOs of our own family. So I'm telling you guys, you know what? Just wake up, seriously, because I love what I do. We're growing, but you guys got to really step up. And I'm no motivational speaker here. You guys have done a lot more great things in your life than I have. But when it comes to this type of business, which teaches you a lot about life, about your own feelings, about your fears, your dumbfounded fears. Because what is fear? Fear is not knowing fear is fearing the unknown. So if you know the unknown a little bit, which is the landscape of the market, then your fear can be limited. It doesn't mean I'm not scared at certain times, but I bounce back. Today and the last couple of days alone, or today alone, you could have made up your whole month's losses in 5 hours. But what stopped you from doing that is your own inherent fear, like, oh my God, what's going to do? So get to know the unknown. That's why work with the service, the Clueless 8 trading service, take the sessions and see how you apply them. And if they don't work for you, fine. But I can assure you that you're going to see the unknown, the darkness behind these charts. Okay? This darkness that you see a lot clearer than what you ever have. And believe me, charging you guys for 40 bucks for 2-hour sessions, come on, wake up. But I'm really trying to be helpful here. All right. I'll take a quick question or two, and we're going to wrap up because it is almost 5:30, almost an hour. Wow. So go ahead, please. You can ask me or you can type it in. Okay. So that's basically it. We are having a very important the coaching session this weekend is going to be Sunday 7 p.m. That's Sunday 7 p.m. I want everyone to be there, people who are paid session members, people who want to join in. You have to go to the members area and on the website and go to the members area and then just click on the right there. Okay, just click on the link. Click on the link here, and that's going to take you into the sign up process. And go ahead and do that. Aside from that, just have a great weekend. And next week, if you keep on doing what you've been doing, well, some of you, not all of you, then honestly speaking, just don't do it. And I'm being very straightforward. I'm trying to get you guys going, okay? Honestly, don't keep on making the same stupidity. And I keep on telling myself that too at times, that what we go through. So I'm showing some phenomenal charts. This is Baba. Holy cow. This is Alibaba. This is not even Win, right? Look at this. This is Win. So NetEase, Amazon. Whoa. It's hitting all my marks that I put out there. So do what you need to do. Thank you for listening. I'm glad that you guys are here. Scott wants to see a quick picture of Google, and just for Scott, I'll show it. Phenomenal chart right now. Phenomenal breakout. Little rest maybe. Okay, little rest. But Scott, don't fall in love with Google. Google's got a lot of little issues and stuff. So if you do the same trend line here, you're looking at 670. That's 14 points. What does 14 points do for you? Nothing. You got to look at stocks that can rise 200% from here. That's why I'm showing you some real powerful charts on the other side. Price line, for example, look at that. 1340 from where we are is 80 points. I want to see things like that. So I'm not saying I'm not going to trade Google, but it's not going to be a primary trading vehicle. Earnings coming in 2 weeks on Google. Yes, so I know. I'm just kidding, Scott. Okay. So there's a lot of earnings coming. It's not just Google. We are entering earnings season. So I know everyone likes to feel good about what they own, this and that. And that's the last thing I'll leave you with. Have an open mind where you can diversify and play with other different stocks. And it doesn't really matter if that particular company hurts you one day or 1 week, because companies don't know you. They're numbers. Play the numbers. And whatever the highest probability numbers are on the upside or downside, you act accordingly. This market today, in a way, changed a bit of character. And that's all the reason why I'm having this thing here. Okay? So thank you for listening. Look to see all of you in the group coaching sessions. And please, the least you can do, especially for the ones who have done very well over the past couple of weeks, or at least today, get some referrals, friends and colleagues to come try us out and hopefully stick with us. Good night and have a great weekend.